Got a little short off of the S&P, which we obviously showed you in the tweets before it happened. You might have been interested. So we had this dealer's edge here at the 44.40s. We got very close to the prior swing low, of course. Nice area to bag some monies. It's quite a fast money move off the bottom edge, so I'm a little bit concerned about the buyers having a reason to deal here at the moment. And of course, we're just coming into the cash open, so obviously that's going to get a little bit of action kicking off. But there's your profit take for the cash open ahead of what's going to happen next. If we go bid above this at 40, it opens the door to 50, doesn't it? If we go bid above 40, it opens the door to 50. Of course, we've got the dealer key at 44 at the moment. So we've got this key price sitting right between these two edges. So obviously that's something that we can now understand, that if we go bid above the 40 here, we could watch for what happens at 44s. And if it goes bid at 44.50 goes bid, it opens the door to the next sweep higher. We're in a bullish market, aren't we? What a run, guys. What a run in that short sell in the S&P. We called it in advance. We showed you this idea of sweeping the 44.50 liquidity, and we said if it breaks 44 liquidity, we're going to see 44.44. 44.44. It did exactly that. It swept this. We did 44.44, and we didn't even stop at 44. We came all the way down to 40s. It didn't really stop. It was slowing down. And then we started to see this ledge forming into the bottom edges. Obviously, if you become bullish, that ledge at the bottom edge becomes your new dealer's buy side edge. If this breaks structure here, you draw in that edge price there. Understand? So in other words, if the market goes bid, you don't draw it in until it goes bid, because at the moment, this is just a mid price of a balance area. You only draw it in when the market breaks structure and it goes bullish. Then you draw that edge on your screens. Comprende, comprende. Now, obviously, when that sell came in, you can obviously bring your sell side profile up to date, and you'll see that the POC was dropping into where that edge is exactly located, right? So you can see that that edge there becomes that price there from the POC and upwards. So that's obviously going to become an incredibly important point of interest for us going forward into this next phase here. Because if we lose control of this, the dealer's key price is 44.30, right? So we've got the dealer's key 44.30s, the dealer's key 44.44. And obviously that's going to be where the market might start finding some action. So we would want to start watching for these types of things. But you can see there's no dealer key there. The dealer never took any interest in the 44s. So we just assume it's not there, right? We assume that they just aren't that interested at the 44 print. Crazy, 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 and a little bit more crazy, guys. Sell side business, sell side business. Here we go. I assume everybody managed to get the buy side reversal on the S&P. And if so, what price did you bid into and what price were you offering at the time? What price did you bid it for and what price did you offer it for? Well, first of all, the value went bullish. Everybody agree that? The value went bullish that we've been using recently. The price took out the dealer's edge. Does everybody agree with that? The price then traded back to the dealer's edge. Did everybody agree with that? And therefore, is that where everybody bid for it? I'm just asking a simple question. Is that where everybody bid for it on this retest of the dealer's edge? And if everybody bid for this, is this where everybody was offering into this 50 print? If everybody was offering into the 50 print, then obviously you've managed to bid off the 42s to 50 for 400. You've made some easy money. And obviously as it hits that 400, you're obviously seeing that the value is just peeling off a little bit. And because the value is starting to peel off a little bit on that candle there, you're starting to close out some of your position. And obviously you're banking your monies at that stage. How do you know this is the dealer's edge? Because you've been doing your dealer's edge on the way down from that bracket, correct? So as we come off the bottom edge, how do we know that this is the dealer's edge? Well, we do it the same thing. We come off the bottom edge price, we go up and we start, as soon as we start breaking structure here, we start following into that structure and we start recognizing where the edge is. And we can see where the edge is. It starts right, oopsies, wrong thing. The edge starts right there, correct? And obviously that's now bringing in that 44.40 price point. So I don't know if it's going to be in there or whether it's going to be here, because you can see that the top of the edge was really 44.40s. That's where we broke structure. So people might come in ahead of 44.40. So we've got to be careful not to miss it. The value is exploding. I want to be long. I'm willing to press on this. I'm willing to deal. We get the deal coming in. Obviously, we've got to be careful about 44.44 because obviously that's a dealer key price. So we've got to be careful about 44.44. But so long as I'm sell side, sell side of that level by a distance, I can be comfortable about knowing that if it sells off 44s, I can at least get my trade out for a break even. If the price goes bid above 44, I can buy back off the 44 knowing that the dealer's key has gone bid. So when that goes bid above here, I can look to try and buy back into this dip as the price rallies back off the 44s for the press into what we now know is going to be the dealer's price, which is going to be 48.50. So we know that dealer's edge is going to run that liquidity now because it's that close to running the liquidity. So we just put our offers just above the 50. And that locks in the perfect short, especially when the value starts peeling off the top edge ever so slightly. Yeah, there's no buy at the bottom edge except for the exit of my short sell. There's no buy. I'm not in any hurry to buy it. I'm not in any challenge to buy it. I'm not being pressed to buy it. But I am buying this one after the dealer key goes bid. I did ask and made a point this morning about the dealer's keys. And I asked people to recognize something very significant. And I thought it was a bit surprising that nobody had mentioned it ever since we brought in the dealer's keys, that the dealer key on the way up does a lot of business as a dealer key on the way back down again. Not because you're following the volume forward. We didn't follow the volume forward. It was new volume. And interestingly enough, the dealer key seemed to go in brackets. It seemed to go, who would have thought that the dealer keys would go in brackets, guys? Who would have thought the market maker range was a bracket type position? Unbelievable, isn't it? But when we see the dealer's key here, which is that sell trade, that's got nothing to do with that volume there, is it? Which means that this price gets more relevance, significantly more relevance as a price point, because there's now the volume edge here on the way down from that seller there. There's now that volume edge there, which created that dealer key in the first place. Because if we go back to that, you'll be able to spot it yourself if you want to go back to that volume narrative there and you say, well, when it breaks south out of that area, that's what that volume was, correct? Absolutely, right? So there's the volume. There's your dealer's key. There's your dealer's edge right there. So obviously that dealer's edge there. And then when the price breaks north out of here, you can now see that the dealer's edge has to be above this POC. Well, it's obviously going to be that same point, isn't it? It's going to be that same point. So there's the edge right there around about 38.5, correct? So if there's an edge at 38.5 and there's an edge at 40, do you not think that's the same buy side, sell side level that we've been looking for? Well, that's why we mark it in the screens, 38.40s, and we look for that buy trade opportunity to get the money done into that next dealer's key edge. And obviously when we come into the dealer's key edge, what was your offer? Do the Nash equilibrium, what was your offer? Does everybody know what we're doing when we do the Nash equilibrium? Or is that something that's been passed? Has that been something that some people haven't picked up on? The Nash equilibrium. So when we break this structure, of course, we've got buy side flow in here, right? So obviously we've got to add that into our bids and our offers, right? See how we've got buy side, what we've got buy side value? So we've got buy side value at this stage. So at that stage there, for example, we've got 46 offered and we've got a bid in at around about 43.5, right? 46 offered, a bid at 43 halves. How do we know that? Because that's what the candle was. That's quite obvious. So obviously if we're going 43 halves to 46, how many points is that? 2.5 points, right? 46 plus 2.5 points means that we're going to be offering 48.5, correct? So at this candle here, we're going to be offering 48.5. Do you all agree with that? So my offer at this stage is 48.5. At that stage, it's 48.5. That's my offer right there. Does everybody agree? So obviously now I've got an offer in this price, and that's based, remember, on this, not this candle here, that's based on this green candle here. Now that's a minimum because of the directionality of the value at the moment. That's a minimum. That's based on price action and price action alone based on that candle. When the next candle comes in, of course, my offer's got to be pulled, hasn't it? Do you agree with that? My offer must be pulled. So when I come into this candle here, I'm looking at 44.75 and a high price at that stage of 47.50. So you're looking about 3 points. So you're looking at around about the 50 wholesale now. You're looking 50, 50 quarter, 50 halves. Does everybody agree that my offers get pulled to 50, maybe 50 halves, maybe 53 quarters? Yes or no? So I'm pulling my offers now across that little phase there. I'm pulling my offers upwards. When this candle forms, we can already recognize that the Nash equilibrium is starting to shorten. The bid was at 7 3/4, right? The candle was 49.5. So you're looking at less than 2 points. So you're thinking 49.5, 2 points, 51.5, a little bit less, 51.25 coming into dealer's edge, 51.25 coming into a drop in value, 51 evens. What about 51 evens? Can you see how you come up with that idea that 51 evens could be a decent enough offer? Because you're starting to add the other elements to your thought. So you're starting to work out, following that candle, that possibly 51s might be a decent price to offer into. Now, obviously, it might not be a decent enough price to sell into, but it's a decent enough price to offer into, bearing in mind that you're currently long the market. So obviously, as the price then takes away from that area, we can recognize that that dealer's edge actually did act as we thought it would. It's a big dealer's edge. That dealer's edge did act on that as a trade, right? That dealer's edge started to act on that as a price area. And obviously that meant that the offer was starting to firm up above 50, wasn't it? The offer was starting to firm up above 50. That's why the offers went flat here. It doesn't mean you managed to get short. You'd have had to have seen some other evidence, some other clues about this being perhaps a bit of short selling coming in. If you look at the dispersion, you can see there wasn't really any clear signs of a short sell opportunity working into that as a phase at this stage. The gamma line itself, well, you can see the gamma was iffy, but the gamma line really did collapse eventually. But that's okay, because guess what happened? You got a retest into that offer level. Because when the price did come out of this area, and we got this candle here at 48.5 and it dropped down to say 45s, and you're looking at a 3.5 point move, so you're looking at a price, a bid of about 41.5, right? So you're looking at that stage at a bid of about 41.5. Well, that's where your bid is now at this stage, right? So when that candle comes in there, your bid's here. The only challenge you had was the value double back on you, so you couldn't sell into this candle here. You couldn't sell that candle. But when that trade started to peel back out again and you're looking at that bid price and you're thinking about this possibility here, well, you're looking at this candle here and you're saying, well, with the value at 46s and the low price, say, at 44s, I'm going to bring my bids up to 42 at this stage, right? So we go from 41.5 to 42s. It's not a big difference in the trade, is it? You see that? So with bids now at 42 and we're selling against that divergent value now, would it be reasonable for you to start looking for that opportunity to lean into that that little ledge there? Now, obviously, as a profile evolves, we can see whether there was any edges in that profile by simply grabbing all the volumes from that point to that point and see where the edge was. That's surprising, isn't it? That's surprising that the edge happened to be exactly where that cell came in after you already knew about the edge. If you were doing your charting properly, you would already have been able to identify that new sell side edge at that price. Because you've now identified that new sell side edge, you're looking for that opportunity to lean into a bit of business there. And that allowed you to then get your lean and get your trade on with the bids now sitting here at 42s. So when the price starts to break structure again here and it goes 43.50s, 45.50s, you're thinking 41.5. So your bids are now dropping back down to about 41.5 at this stage, right? So your bids are now getting pulled. So when that candle comes in there, your bids are getting pulled. When this candle comes in at 43.75 and this candle comes in at 42, you're thinking, okay, I could go another 2 points here. I think I'm dropping my bids down to 40 now. Yeah? So in that candle there, your bid is now on 40. When this candle comes in and the value is still collapsing, you're saying, my God, 42, bottom edge, 39s, 3 points. This is going down to 36s now, right? You're going to start saying to yourself, I'm going to bid 36s at this stage, right? So obviously your bids are now down at 36. And what happens next? Well, obviously your bid firms up at 36, correct? Because none of these candles go below 36, do they? So what happens is that that bid becomes firm at 36 at this stage. And now what you've got to say to yourself is, do I want to cross the spread to go any higher on the bid? Because now this is your bid price. Does everybody see how we've came up with that buy price area? You see how we did it at the offers at the top edge and now we've done it with the bids at the bottom edge? But because then fair value exploded north, do we leave our bids at this price or do we start working that fair value change into our thoughts? Well, when this candle comes in from 40.5 and it drops down to 39s, that's 1.5 points, suggesting a bid around about 37.5, yes? So I could then look at a bid of about 37.5 on this trade, right? So I can now go into 37.5 at that point, right? Agreed? And at 37.5, when we see the next candle coming in, and it's a little spinner candle, does that firm up your bids at 37.5, yes or no? Does that spinner candle firm up your bids at 37.5? Yes, it does. So if we start seeing somebody coming in this area and absorbing selling, do you now have an idea about who it is? It's probably possibly even you, right? It's possibly you looking at that saying, somebody's coming in, I'm going to join in that buy trade opportunity at that stage. Maybe you don't like it. Maybe you don't see it. But at least you know about it. At least you know what you're thinking about at this stage, right? You know what you're thinking. What's missing from this chart at the moment? What have you not got on this chart at the moment? You haven't got your dealer's edges for the sell trade, have you? You've got it away up here, but you want to know if there's any more that's came in since the break lower. When the market breaks lower, you bring in your new dealer's edge. Can anybody see a new dealer's edge? Yeah? Did everybody have that dealer's edge on their screens? So there's an offer there, isn't there? It doesn't mean it's your offer, but there's an offer there. Whether you like it, whether you don't like it, doesn't make any difference. There's an offer there. So you now know that there is an actual offer sitting at that price according to what you think is going to happen next. So you're now looking at the bid here and you've got an offer here, correct? You've got a bid here, you've got an offer here. So you're now pricing your market. And if the value changes, you might firm up your bids. If the value changes, you might pull away your bids. The value is dropping again. So you might say, you know what, I'm going to pull away my bids here a little bit because the value is starting to put a bit of pressure on me. So I think I'm going to see that price just dropping out a little bit if that value keeps dropping. And this is quite a big this is quite a big strike candle here. So you're going to say, well, I'm going to just temporarily pull away. Now, if that was obviously the value was still bullish, this could be a buy opportunity, couldn't it? The value's not bullish. So you say, I'm going to just pull away my bids a little bit here. I've got a lot of paycheck below here, right? A lot of paycheck below here. So we mark this area as a liquidity pool. And we think to ourselves, well, they might go for that paycheck at this point. And you start pulling away because of that. And you say, well, we've gone 41s to a low price of 38. So that's 3 points. 38 minus 3 gives me a bid at 35, right? So 35 bid happens to be that liquidity pool now, doesn't it? Yeah? So you might have bid in here, but you're not bidding here. You would have bid here if that value was a lot more bullish, but it's not bullish. So you just pull away your bids at that stage and say, well, let's wait and see what else happens, right? You see how it plays out, guys? You see how this becomes incredibly valuable? We know this is an incredibly big level here because we already talked about this level at 40. So the fact that we've gone offered below 40 means that you're probably going to see a break back down towards the 35 anyway, right? And there she goes. And what's your current bid? It goes 38s down to 36s, so your current bid is now 34s, correct? 34s. You see how we're just pulling away our bids and we've not been jammed into this as a bit of business? And if you wanted to do any business at all, the only trade you could have done there was to sell it there, correct? If you're pulling away your bids, you can be selling into that pool. You understand? So for example, if you pull away the bids from this phase here, you sold up here, you could have easily have sold there. It's a market maker's game after all. You could easily have sold there, agreed? You could have sold there. You could have sold there because you were still pulling away your bids. And if you're pulling away your bids, you could have sold here. If you didn't sell here, you could have sold there. And obviously, if you sold there at 38s, you can see you've just traded 35s. That's $150 in 60 seconds. That's a nice way to make a living by trading this like a absolute pit boss. You're dominating the markets here, aren't you? You're dominating the marketplace. But do you see how that pool of the bids has allowed you to make that decision by pricing the market properly? I mean, you're not interested in bidding for this unless you see 33.75 at least. And obviously, if 33.75 comes up, there's a fair chance that that's going to be a big red candle, right? It's got to be, because you can't get to 33.75 unless you get a good solid pop to the downside. Now, if the value is rising at that stage, count me in. I'll start buying 33.75. Count me in. I'll be a buyer. But if the value is falling, of course, we'll pull our bids again, won't we? If the value is falling, we'll pull our bids again. So now the small candles came in. What's happening to the Nash? What's happening to your Nash equilibrium at this stage? Are you leaving it down here? Or are you thinking, wait a second, the value is going up. Small candle getting absorbed for about a point. Could I not maybe consider bringing my price action back up a little bit here just to take into account the fact that we might be sweeping that liquidity pool? Well, you could obviously now check out your value. You could think about the shape. You could think about the structure. You say, you know what? Nah, it still looks a little bit bearish to me. I don't want to be too keen to buy this too early. And all you're going to now do is track that bid away from those prices. Track the bid away from those prices. You know, so you start making decisions based on your feeling, based on your ideas. It looks good to buy it. But this liquidity looks very, 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 very tempting. And if the liquidity looks very tempting, I would love to see that sweep. And guess what? Sometimes if they don't give you the sweep, sometimes you're left looking at it, seeing everybody crossing the spreads and you're not on board. If that's the case, guess what? C'est la vie. C'est la vie. No luck. It happens to the best traders on the planet that they don't get the trade they're looking for at the price that they're willing to bid into, and they just let it go. They just let it go. And they start, as the price starts rallying, the bid is now in place. You know what the bid is. So what you're now going to do is work on where your offer is going to be, right? So you start thinking to yourself, where's my offer going to be? And you start looking at this candle and you say, well, we've gone 37s and we've traded 39. So at the moment, my offer becomes 41, right? So my offer at the moment sits on the 41s there. And I say, right, there's my offer to start with. And it's now up to me to try and either bring that offer into play or pull the offer away from play. So there's my offer at 41s. So at the moment, I am 34 bid at 41s. 34 bid, 41s. Correct? 34 bid, 41 offered. And if I don't get any value to trade into this, the value seems to be very moving at the moment. So I'm going to be a little bit more inclined to just pull my offer up a little bit. Pull my offer up a little bit. And guess what happens if you start pulling your offer up a little bit, guys? Guess what happens? Well, you could have stepped straight into that buy trade there, couldn't you? Just like you did on these sell trades. If you find you're pulling your offer, you've got an opportunity to buy it on dips. It's called the back pressure trade. So we basically just fill in the back pressure of the last move here. You probably would have easily got filled at 38s. And now the trade's traded a high price of 39.75. You just made 5 ticks, 6 ticks, 7 ticks, 8 ticks maybe. Make sense? Makes a lot of sense, right? So the offer is still getting pulled. You've just gone from 38 halves to a high price of 40s. That's 1.5 points. So you're going 41.5 at the moment, 41.5. The value line is bullish. You're looking at fair value here and you're saying 41.5, a little bit cheap. So 42s makes a bit of sense, but so 42 was where we were before. So I'm not going to move it up any further. Not going to move it up any further at this stage. So if I want to buy into this, I want to buy deeper prices. I want to buy into that previous candle. I want to pay 38 quarters. Best price, I want to pay 38 quarters. Make sense, guys? Because your bid becomes the price that's actually bid. It's not the price you're willing to offer. Your bid becomes the bid. If you're pulling away your offers, it's got to mean that your bid's moving as well, right? I mean, you're trying to keep that bid offer spread in play. You're not hiding from it by saying, oh, I'm bidding 34s. What? Seriously, what the hell are you bidding 34s for? Do you think you're going to get traded anytime soon? Well, I don't really like the buy side. Well, that's different. That's a different game altogether, right? If you don't like the buy side, what's your offer? I don't really like the offer side either. Okay, so what are you telling me? I'm telling you, I haven't got a bloody clue what's happening and I don't want to deal. Okay, guess what, guys? That's actually real. That thing happens. That idea happens. If you don't want to deal because you're not sure, you don't deal because you're not sure. Good news. It happens to the best professionals. They're not sure, so they pull away their bids and offers for a little bit of time and they figure it out. There's a perfect example. Are you currently bidding? Are you currently offering this 42 when that value exploded north? No, you're pulling away your value. You can see the value is now pricing this into this balance. So what you're doing is you're pulling away your offer and you're going up to that next price, aren't you? And that little buy trade just made you a fortune. You see how easy it was? You see how easy it was? Did we call that live in the room, guys? Did we tell you that you're bidding this live in the room? Did we tell you you're getting those deeper prices live in the room that you're going to want to buy around about that 38 quarter, 38 half area? Yes, we did. The price traded 38.75. You might have been a little bit cheeky to get that trade on, right? A little bit cheeky to get that trade on. And obviously when you head into an actual dealer's edge, that's not a fictitious sell price. That's a real seller. So obviously what do you do at that stage? What do you do here? You book some monies. You don't book some monies afterwards. You just book some monies because that's a real price. That's not a fictitious offer that might get moved. It's a real seller. Big difference between the two people, isn't it? It's a real money seller, not a fictitious offer. So when that big candle comes in, what's your offer at the moment, guys? What is your current offer? Well, we went 44.40s to a high price of 44.44. So your current offer actually is 48, correct? So your actual offer is 48 now. So when you get a red candle, would you not be interested in starting to bid into this red candle? Sure. Sure, absolutely. And if you bid into the red candle there at 42.5, it just traded 44.5, you just made another $100. Okay, you might have been scratched out by now, but you still made $100. Are you now a buyer? Absolutely. You're pulling away these trades. You're obviously recognizing that you just swept the stops. You just got some liquidities into that narrative there. You know that this is a dealer's level. That's why you're not buying at 44s, because some people will say, but wait a second, you just pulled your offers, but you didn't buy at 44s because there's a commercial at 45s. Why would I buy at 44s? It's too close, right? It's too close to that dealer's edge. So I need a decent discount to get into any buy trade. I mean, that still might be a little bit narrow. I mean, that's why probably you only got up to here and it's sold back off again, because it's a little bit tight, and you obviously recognize it's a little bit tight. But we've now made a structure break. So we now have to do what? We have to put the new dealer keys onto this rally price. So we find the baseline and we go along to the rally price there, and we can see where the dealer keys are. So we can see obviously that there's a POC here, which obviously is going to contain that buy side dealer's edge. And there was a little edge here as well, which if the value stays bullish, I would be very interested in, because that ties in with all of those other dealer edges right there. You see that tie-in? So got a dealer edge forming at that price. 44.40s. It's another wholesale price, which brings in the challenge of the swept liquidity again, doesn't it? Brings in the challenge of the swept liquidity. So we're looking at that bid price. We're thinking about the idea. We're watching the candles. What's your current actual bid? We go 43 quarters to a low price there of 41.75. So we're obviously looking around about 41 down to about 40s. So we're looking at the moment of a bid about 40, correct? So we're going to try and bid 40s. Do you see why most guys on the floor are, their arithmetic's fast, their arithmetic's hot, right? Just get the round numbers, guys. 43s, 41 halves. So you're looking at 40, right? 43s, 41 halves, you're looking for 40s, right? So you're looking at that bid at 40 at the moment. And then the small candle came in. Well, that firmed up that bid at 40 at this stage, didn't it? It kind of firmed up the bid at 40. So your bids followed up here. And obviously you're now looking at that 40. But what's the challenge of bidding 40? What is the actual challenge of bidding 40? It's a sweep price, right? It's a liquidity price itself. So we know that the bids at 40 are likely to get swept. So you start thinking about where your flush purchase is. And we start thinking about the 40 as a sweep, and we start thinking about the flush below 40. So we put in that flush buy trade in there. Make sense? And did everybody see what happened in there? Did everybody get it? Did everybody get that storyline right? Let's take a look at that micro chart for a second, and let's see how that trade eventually evolved. Take a look. So this is that 20 tick chart that we've showed you before. Take a look at how that trade evolved. So we can see obviously that the liquidity is off the 40s, right? We've now got this prior swing low here as well. And we're now worried about that as a sweep. We're worried about the sweep coming in, right? So 39.75, 40 sweep, you're looking at 4 ticks. It's normally going to be about 3 to 4 ticks. So you're thinking to yourself, 39 would be the right price in terms of that pro trade, correct? We talk about the pro trade being 3 or 4 ticks on the S&P. Everybody understands that, yeah? So I'm thinking 39 would be a good pro trade price. And you start watching it. There's sellers here, price doesn't go above them. There's sellers here, price is starting to go above them, but no buyers. There's sellers here, now we're getting buyers above. Is that a good sign or a bad sign? Now that there's buyers coming in here above, is that a good sign or a bad sign? It's a good sign, right? So obviously that's a good sign. So the fact that there's buyers above, can I now firm up on perhaps a bid here? Can I now firm up on a bid here at 875 39s? Sure. And when a seller comes in here, a chunky seller, if I haven't got my bid filled, could I maybe come in here with a buy stop order? Sure. So I could come in with a buy stop order to try and get that big seller offside. So if I get filled at 9 1/4, I'm now bullish and I'm now long the market at that stage. I'm now long the market at 9.25. And do you see how good that price at 9.25 could have been for you? 9.25 filled. 9.25, that was your fill, guys. That's perfect, isn't it? Absolutely perfect. 9.25. And you see that you've got 9.25 all the way back up there to 2.75. A drawdown of 0. A drawdown of 0. Love it. Absolutely love it. So what you're now looking for is you're looking for the dealers in a dealer's area doing the dealer's trades, aren't you? That's what you're looking for. You're looking for those sweeps. You're looking for those leans on sweeps. You're looking for those jams. You're looking for a refreshed order book giving you an opportunity to buy into it. And all you're going to now do is play the trade. Play the trade. Now, that's a big, fairly big candle here. So based on that, it's 1.25 down to a low price of 9.5. That's 2 points. That takes you down to a bid of 7.5. So you're obviously bearing that in mind, that this is looking very, very bearish with that size of candle. A little bit unusual with the value that we've got. A little bit unusual. So you've got to be careful. And you're thinking 7.5 bids. You're thinking they're going to try and sweep this, aren't they? Sure, they've just gone ahead and swept it. Unbelievable, right? They've just gone ahead and swept it as if that was not known to you at that stage. Does it mean you've got to be bidding 7.5? Does that mean you've got to bid 7.5? It's a little bit much for the value way up here, but it looks on the face of it, based on that candle, as if that might be right. Did this candle change the Nash a little bit? Sure. Did it firm up the bids at 7.5? Yes, it did. Did that candle firm up the bids at 7.5? Yes, it did. You're now drawing a flat line. What does that flat line mean for sellers? Well, what are you not doing when you draw a flat line across the charts? You're not pulling your bids. So are you going to sell this, guys? Can you now sell this as a trader? Absolutely not, because you're not pulling the bid anymore. If you're not pulling the bid anymore, you can't be selling into this price here. So you're just letting it go and you're watching it as an opportunity to start doing a bit of business. There was a big ICE order at 8.75, by the way, guys. A big ICE order came in at 8.75. It traded 8s. I've taken some buys off that trade. My God, we've just rocked to the upside, guys. I'm going to bag some monies here. I got some good size in that trade. I put a little 20 in for the bank there, and we've managed to get a little sweep off that 20 at 8.5 there, guys. It's just traded 40.5. I mean, it was only 20, but it was still a reasonable little play, wasn't it? Nice. 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 Brilliant. What a trade. Okay, so let me just go back a little bit. And let's look at that bottom edge. Why did I jump? Why did I jump into this trade before the bid price? Well, first of all, we'd started to flatten out the bids. That's the first sign, right? If you start flattening out the bids, it means you've always got a chance of going up into that price now, right? So obviously when that candle formed at 9.5 with a low price of just 9s, you're looking at any price around about even 8.5, right? Agreed? You're looking at any price about 8.5. So you're looking a bit between 8s and 8.5 now for a buy trade. So what happened at 8.5? Well, we got a little bit of liquidity. So you can see we got a little sweep here and the price went immediately bid against that sweep. See how you've got the dotted dots around that one? So we got a little bid against that. Then we got this massive ICE order at 8.75. And the price went bid against that ICE order as well. So now I'm very, very interested. I'm not seeing a lot of buying above me. I'm not seeing a lot of buying above me. So I'm very, very cautious about this at the moment. The price swept and I seen this 50 lot guy right here. When I saw that 50 lot guy right there, I decided, you know what, I'm gonna take a bit of business from that guy there, see what happens. So when I saw that guy coming in and I thought, you know what, I'm going to start bidding this area here. I'm going to go 8.25, 8.5 and see what happens. And obviously the price then exploded away from that 8.25, 8.5 and we made some really nice money from that little bit of business there. And it all came from us just shouting about this bid firming up at this stage because you saw that small candle. And because the value was incredibly bullish, we wanted to be long, correct? We wanted to be long. We wanted to be in this. We were willing to cross the spread aggressively because this candle would have allowed us to do that at this candle here. And that's exactly what we did. And we got a nice, positive, solid swing away from that price from 38s to a high price of 43s for 5 points, $250. Fantastic. And at that stage, of course, the dealer's edge doesn't change. That's a static presence on the charts. That dealer's edge does not change. And, obviously we've got a bit of a move away from this, and that dealer's edge did work out. It's just the fact that it's at the 40 that's causing a bit of liquidity. We've got a dealer's edge in here. We've got a bid just in front of that dealer's edge there, which gave us this opportunity to buy into it. The value was very good. We got the trade done and we made some money. We got the trade done and we made some money. But do you see how we followed this trade? See how the bids line has followed this trade? See how I'm always bidding and offering? Do you see when I start pressing into trades based on the story that's evolving from the value as well? Now, I could easily just keep going with the offers as well. I could, the offers line would obviously start following the trade, wouldn't it? The offers line did something like that, right? And because the value then folded out of this area, you're looking at that and saying, well, I'm going to be worried a little bit about that fold there, and I'm going to bring my offers up into this. Eventually, I think we ended up with that offer there at that stage, didn't we? And we obviously then went into here and the offers then exploded. We pulled the offer away because of that candle there. And we put the idea of that offer into that price. So if the offer's up here at the moment, then of course, and the reason why the offer's up there, of course, at the moment is because of how much buy-side value we've got. So if that's the case, what's your current job is to keep looking for those discount bids, aren't it? You're looking for those discount bids to buy into, right? So you're looking to try and find whether you want to do business, whether you don't want to do business into this bid level. And there's a short-term value narrative, there's a price action narrative, there's a dealer's edge narrative, there's an order flow narrative. And our job as professionals is to make sure we take into account all of those narratives, figure out whether we want to do any business here, figure out what current price we want to do any business. Now, for whatever reason, guys, obviously, the 44.40 is a nuts job price area, right? Take a look, guys, the last time we traded 44.40. This is going to shock you that this type of information is on your screens and you don't even know it all half the time. Take a look at that. Take a look at 44.40. Is there anything that shows up here, guys? What do you think? Is there anything visible at 44.40 that you might say, what the hell is that? You see it? Somebody's buying a massive amount of S&P, right? Somebody's buying a massive amount of S&P positions at 40. Do you agree with that? I mean, it's kind of obvious that somebody's doing massive business at 40, right? So we just recognize that it's happening. We recognize the amount of selling that's at 40, and that's one of the reasons why we didn't want to buy too early, right? But we just acknowledge somebody's doing a massive amount of buying off the 40s at the moment, guys, on that S&P chart, right? It took them approximately 50 seconds to get several hundred contracts in there, guys. About 50 seconds. Okay, so I want to show you the conclusion to that ICE order. Take a look. You see the conclusion to the ICE order? They swept it, didn't they? There was so much ICE order coming in here that they swept it, and then they got these stops on the sweep. And those stops on the sweep allowed you, as a buyer, to then lean against those stops and say, you know what, 165, give me a bit of that business, guys. Give me some of that business at 9.5, 9 3/4. I quite like the idea of taking a play against that. And obviously the outcome from that trade was actually pretty good. You got a little pop, you made some nice easy money. It might only be 4 ticks, but you're making some nice easy monies, right? The challenge, well, where's the buyers at higher prices? There doesn't seem to be any. We want to see some buyers up here. There doesn't seem to be anything up here. It seems a bit quiet for me at the moment. So you're obviously now thinking, well, if there's no buyers there, I guess we're going to be doing 9s pretty soon, right? I guess we're going to do some 9s pretty soon. And you start looking at that 9 idea and you say, you know what, we're going to take it back down again and we're going to look to get into those bids again at these lower prices. And look at what's happened to the last bid. Remember we firmed up that 7 3/4? Remember we firmed it up? It's a nice takeaway, isn't it? That's a nice takeaway. Boom. Straight off your firmed bid price, guys. Straight off your firmed bid price. Straight off that dealer's edge price area. And that's how easy it can be. Do you want the dealer's trade? Well, if your offers are way up here, one of the things you're not doing is you're not chasing it. Because this dealer area has been known for some time. So the idea is that if your offers aren't moving, you shouldn't be chasing it. Because there's obviously something sticking this price for the time being. Do you understand? So if there's something sticking the price for the time being, it'd be very easy for me to start bidding here with that big candle for a continuation. But because there's something sticking this, I've just got to be a little bit more inclined to be cautious about this at the moment because I'm now acknowledging that I'm not getting a successful auction. So I don't want to be bidding here at 40 halves and 43 quarters with this kind of backdrop behind me at this point. Obviously, if you'd acknowledged the seller that's coming in there, you'd obviously, it wouldn't take a genius to then be able to recognize that there's a seller's edge up here that's now moved down into this space just ever so slightly. If we go through that phase there, you'll be able to recognize that there's a little seller's edge that came in there around about 2 1/4, which obviously is bringing that seller in at 2 1/4. So if I'm bidding 41s, for example, I don't have enough room to get into that deal. But simply without having to do that, because it hasn't broken structure, just recognizing, for example, just recognizing that it's not going higher is allowing you to consider that this offer is, you know, it's the right price to sell at. I don't think anybody would think that they want to get short in here with the value up here, right? So for me, I'm looking at this and saying, well, my biggest concern is this liquidity pool, correct? But what does it look like? It looks like fast, slow, doesn't it? It looks like fast off the bottom edge, slow pull back into the bottom edge. Well, no shit, Sherlock, because you've been the one that's been buying this bid, right? You're the one that's firming up your bids. You're the one that's making it slow in the downtick. And now we've got a real challenge. The short-term value is just peeled off really quite hard. That's going to pull my bid away from the bottom edge short-term, correct? So with that coming in and peeling, I just want to make sure I give myself a little bit extra room to take that into consideration. There's likely to be a stop run, and that's likely to bring in the next liquidity pool at the bottom edges here. And that could open the door, ultimately could open the door to the bottom line sweep again. So all you do is you pull your bids, you make another bid price. You start thinking to yourself, well, that value is giving me a few headaches. I just don't want to be overly keen because obviously that's what's called a failed auction, right? So that's a failed auction and you say, well, I can let it go a little bit lower. I still want to be buying it. I can't sell it. I still want to be buying it. So based on that candle, what's your current bid price? 875, 775, at least 675, at least 675, probably a little bit lower because of that value line. So at the moment my bid is below the current price. I'm not interested just yet in getting this firmed up. I'm pulling away my bids on this candle as well. At the moment, I'm pulling away my bids on this candle. It's accelerating 775, now 6s. So my bid is now dropping below the bottom edges. And there she goes. Look at that, guys. There she goes. Do you see how amazing that was, that little process where we didn't bid into that? We just let it go. We just let it go. This candle's gone 775s, 575s, 2 points. You're now looking at 375. So you're looking to firm up around about 4s at the moment, right? So you're looking to firm up about 4s, which is going to bring in that bottom edge liquidity pool that we've highlighted in the background. So obviously, depending upon how the value goes, we'll now let it go for its sweep to the downside. And when it goes for its sweep, are we firming up the price? In other words, do we see any absorption? No, not yet. So we're now looking at that as a bid price. We're looking for absorptions on the sweep. The sweep was 5s. The bid would probably be about 4s. And you start looking for it, right? You start looking and asking, do I see any ideas? Did you see the big ice order that came in at 4s, by the way? Anybody grab a bit of that? Big ice order at 4s. Sorry, it wasn't at 4s. It was 4.25, guys. Big ice order at 4.25. I did get some business against it at 4.25, 4.5 on the retest, and I've managed to get some money out of that deal, so I'm in profit at the moment. Okay, so let me show you that big ice order, just so that you can recognize what happened. Why did I take the deal quickly there? Okay, so that's what happened there. Do you see the size of the ice order that came in there? So you're obviously now looking at that saying, oh, that's interesting. A little bit earlier than I thought they were going to come in. I thought they were going to come in at 4s. They've come in at 4.25, so now I'm interested. But I didn't know that was going to happen until it happened, right? So now I've missed my opportunity. So what happened was the price then retested here. The selling was almost non-existent. So what I did was I just jumped there at 4.5. I just jumped straight into that trade at 4.5, bought the 4.5s, and now I'm obviously looking to see if I can take the price back off that point. And obviously the 4.5 bid at that stage, the 4.5 that I took as a buy trade obviously rocked to 5.5 for a very easy 4-tick profit. And obviously we got a little sweep that got jammed. We managed to take out 3 ticks. And then we were obviously able to start watching for the next part of that action, right? The next part of that action. Yeah. It's not slow, guys. It's not slow, but this is the market you decide to trade. This is the market you decide to trade. It is what it is. So you can see we've got that trade on. We've managed to make money on it. We paid 4.5 on that deal off that ice order at 4.25. We've got that bid in place. We've got the buy at lower prices. It makes sense. The macro value is still bullish. This is a macro price level. This is a macro price level. In other words, this is a flush price, correct? So we would mark this off with that flush narrative in the bottom edges because it's a pool of liquidity. And obviously that buy trade's just gone and kicked ass, hasn't it? Nice. Well done, right? So we firmed up those bids. We were able to cross the spread, not because of the firmed up bids, but we were able to cross the spreads because of the ICE order. And because of the ICE order coming in, we were then able to take advantage ultimately of that 4-point move for $200. That's pretty good, isn't it? That's a pretty good outcome. But do you see the idea of being less aggressive when the market was falling, even though the value was bullish? Do you see how we pulled away the bids right at the right time? Do you see how some of you were forming that opinion along with me? Did you see how some of you were making that same assumption about pulling the bid for the sweep? I even seen a few of you typing it in. I think it will sweep, I think Theo said. I think it's going to sweep. Well, guess what? Theo's not going to bid before the sweep now, is he? He's going to wait until the sweep happens, and then he's going to think about that bid opportunity, because it is a buy opportunity. The value can't get as short. The value cannot get as short. And guess what we've just done? We've just bought the bottom tick price. We've just bought the bottom tick, guys. Is that not a good one? Pretty good, right? Pretty good. I don't know what else we can do, guys. I don't know what else we can show you that's any better than that. Now, we don't know it's going to turn around like this. We don't know it's going to turn around like this. We don't have any clue that it's going to turn around like this. But did I not already highlight the fast and the slow in the background? I'm pretty sure I did mention it. Did I not already tell you about the slow grind into these bids and that you were the reason for the slow grind? If you're the reason for the slow grind, you're also the reason for that pickup in speed there. Do you see it? You're the reason for the pickup in speed because guess what? You're trading like a professional. And as you're the reason for the pickup in speed for that sweep, you're also the reason for the market turning around for the turn. You're doing the same as the professionals are doing. You're reading the market in the same way that the professionals are reading the marketplace. You're doing the same trades that the professionals are doing, and you're absolutely killing it now if you're following this process. So we've allowed ourselves to now be trading in line with the flow of orders because we've been pulling away bids, but we don't want to sell it. We can't sell it because the value is bid, so we're very, very cautious. We're still trading correctly in the right direction at the right time, acknowledging the short-term buy and sell pressures, acknowledging when that value line turned down hard here, I says, oops, that's not good. Let's get those bids out the way, which enabled us to get the bids out the way. And therefore we never got filled during that phase. And it wasn't until we got that big ice order at 34 and a quarter that we started to go bid back in at 34.5. And now we've just killed it up to 46s. $600 a contract, guys. $12,000 more paid into the bank account. Not a bad little outcome, is it? Not a bad little outcome, because guess where my offers are? Well, my offer's not until I'll be up here at this point. We've obviously got this dealer's ledge here as well, which we're obviously mindful of, and you know, a good place to bag some monies. So that's what you should do if you come into that price area. Just bag out some cash into that trade there. Obviously, your market pricing at the moment is just pulling away a little bit. But do you see how active you've got to be in these ideas? You see how active you've got to try and think about these as processes? You see how active we've got to really, really, really be alive to the opportunities about these bids and offers? Do you see what happens when you don't hide? You see what happens when you don't hide from the bids and the offers? You actually get involved and you end up making money, right? You end up making the monies, and that's a good thing. That's a good thing. So we're just going to take some more money. The value looks good for a retest of the highs, but I'm going to take some more money into this price level here because that was our original offer, remember? So we've got that offer still in place. A little bit of a slowdown here, a little bit of an acceleration here, but obviously if you were to look at the volume, you'll see that there was a sudden big surge of volume as we hit that last little price area here. So I'm a little bit cautious about this. This is obviously the big dealer key in the background. This is where that very toxic sell came in pre-market from the news. Yeah. So we get that very toxic dealer's edge here in the first instance, and therefore obviously at that stage the value line's going a little bit above it, so I'm going to be very cautious about this. I am not selling this. I am just taking profits. Yeah. I'm just taking profits. I'm not selling short. How can I sell short? I can't sell short, can I? So I'm using these offers to simply take some profits out at the moment. What a trade, guys. What a trade. 34 quarters. We bottom ticked it, guys, for 16 points, $800. That's pretty good stuff, isn't it? That's pretty nice. And the good thing is you were actually listening to the commentary at the time, and we showed you that ice order just after we'd got the trade on and we managed to make our trade out. Absolutely spectacular. And how many profit takes along the way? Just the two. We took some profits in here. We took some profits here. We never tried to take any profits earlier. Why would we want to? That's simply letting the trade run. And in fact, if you're obviously pulling away your offers, couldn't really pull away the offers because we had the offer way up here at this stage. But you see we had a lot of room to move into that trade, a lot of room to move into that trade. A lot of room. Absolutely spectacular, guys. I hope you agree. That was spectacular. People wouldn't believe you got the bottom tick price, would you? You wouldn't believe you actually got the bottom tick price within one tick. But hey, that's all right. So little liquidity pool here, guys. That's obviously day high, so we know that that's the liquidity pool that we're now aware of. Nice opportunity if you're still holding some positions. If you haven't taken any of your money out yet, a nice place to bag some money when you get a liquidity pool to bag into. You can see the surge of volume coming into that liquidity pool. So if you're still looking to get some money out, that's a nice place to get some money out. So we've taken profits, you've taken profits. Very, very, very sweet, guys. Beautiful. Well done, anybody that saw it, dealt it. Superb trade, guys. Love it. And if you're learning it, that was a great example to see live in the room, guys. That was a great example to try and figure out how it was happening, what we were seeing, to try and make that read for yourself, to try and understand that. Crazy, 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 and a little bit of craziness. Beautiful. Let's take a look at the order flow for that on a minute chart basis. So you can see that beautiful ice order into the bottom edge there. It's not, it's not dependent upon your time frame. It's just dependent upon your order flow. Big heavy selling coming in. Market maker was bid on the book. Heavy selling, heavy selling. Prices are getting absorbed. The ice off the bottom edges. There's your buy side lean right there. There's your buy side lean. You're just jumping straight in there, and we paid 34 halves as we shouted at the time. We paid 34 halves, and there's your outcome. Nuts, isn't it? Absolutely nuts. At this stage here, there was a lot of bulls. Because there's a lot of bulls, this ice order is a little bit surprising. So obviously you're expecting that to, if there's a lot of bulls here, you're expecting the market maker to cap off this price here, right? So the market maker's incentivized to try and bring the price back to the bottom edges. This is exactly what they did. Exactly what they did. They brought the price back to the bottom edge. They got a lot of sellers in here. They bought from the sellers here, got a bit of a pop. They bought from the sellers here. They got a big pop. Beautiful. Sensational. Spectacular. If you just follow that, that bid and offer line, guys, for a second, just think about what we showed you there live as much as we could. You see what we showed you in terms of that bid and offer spread? Do you see it? And it wasn't all based on value, was it? It wasn't just based on how value was evolving. It was based on a lot of other elements, wasn't it? It was based on liquidity. It was based on how the price was moving. It was based on the narrative that was unfolding behind the price. Because if we just simply then overlay the price on it, do you see how our bid offer spread has an awful lot to do with the price, but not all to do with the price, especially this last little shove here. See that little shove there? That's where most people get caught out, isn't it? Well, it tried to catch us out, but we were wise to it. Agreed? We were wise to it, and that's why we pulled for the sweep. You guys were wise to it because you were shouting it as well. Theo was shouting on it, I think they're going to go for the sweep. Damn tootin' right they're going to go for the sweep. That short-term value told us they were going to go for the sweep. So even though we've got that overall view that the value line becomes the bid-offer spread, we still have areas like this where you give it that short-term value influence, and we just use that to pull away those short-term bids. Because of that, we stayed safe. Because of that, we never got a stop out. Because of that, we never lost a penny. All we did was make lots and lots and lots of lovely cash. Perfect example, isn't it, guys? Perfect example. We'll build out these screenshots. You'll be able to recognize just how good that is. The storyline turns out to be. We'll pop them into Twitter as a little series of screenshots side by side. And that, for everybody that doesn't know, is what we mean when we talk about pricing the market properly. I said we'd focus on it. Does everybody see the value of being able to price the market properly? Have we made our point? Have we made our point? Have we proved our point? If we have, are you going to start doing it? Are you going to start adopting it? Are you going to start getting active in it? Absolutely, right? Absolutely. So now you've got to start. Michael, what market are you trading? Michael, what market are you trading? The ES, what's your current bid and offer? Ab, what market are you trading? Murray, what market are you trading? Roshan, what market are you trading right now? What market are you looking at right now? What's your bid and offer? Get them on your screens. Get them on your screens. Get them on your screens. Get your bid and offer on your screens. Type them in if you need to. I'm not talking about real bids and offers. I'm talking about practice, guys. I'm not talking about holding you to bids and offers. All I want to know is you're not hiding from the price. All you've got to know is you're not hiding from the price. It's easy to keep pulling your bids and pulling your offers and never getting traded, right? Easy to do that. But you can see that your day is dominated with these bid and offers, aren't they? That your day is literally filled with bids and offers. And if your day's filled with bids and offers, I mean, it'll change by the time Roshan types it in. It may well have changed, and that's okay. What I'm asking you is, are you doing it? That's all I really want to know. You know, and obviously in an intern setting, I would know exactly because I'd be able to see it on their screens what their bid and their offer is, right? I'd be able to stand behind everybody. I'd be able to look at my terminal and see what everybody else's bids and offers were, and I'd be able to start noting which of the interns was hiding from the trade desk, right? Which of the interns was hiding from doing any business, and then I'd get rid of them. I'd just fire them. I don't want people hiding. I want people dealing. That's the only way you make money, right? It's the only way you're going to make money is if you get some business done.